The expenses worksheet in the Sustainability ROI Workbook is used to calculate how the proposed project will save the company both operating expenses and HR-related expenses. Let's take a look at how it does that. So when you open up the tab for the expenses worksheet, you'll find that there are a fair number of cells which are inviting input on company current expenses associated with various operating expenses. And if you scroll down, you'll notice that some of these may be impacted by your project, some of them may not be. So energy might be, carbon might be, business travel probably not, maintenance probably yes. Waste disposal maybe, and some of these others may be a little problematic. So take a look at which ones you think are going to be impacted by the project, because there's no point in tracking down current company data for things which aren't going to be used in the calculations. And when you're finished, you might fill in the data for the ones that are relevant so that it looks something like this. So we've only tracked down current company data for the line items that are most likely to be impacted, and we've just left the other ones blank. You can take them out, but as we said in the revenue worksheet, maybe it's good to leave them in case somebody else that's working with you on this sees opportunities there that you don't, and you can add those in as potential areas of savings as well. Next, you want to estimate what potential savings the company might realize as a result of your project in each of the identified line items. As with previous worksheets, what you do is you use the comments to help with those estimates. So you click on the cell, you right-click on it, you edit the comment, and that shows you all of the information that's there for you to draw upon. So lots of possibilities in this particular case, and some estimation guidance. And you can edit this comment so that you include other examples that might be more relevant that you are aware of, and you can also include it to include a bit of edit it to include a bit of an audit trail as to what the thinking is behind whatever assumption you use. And talk to other people in your company as well, or other experts in that area, to see if you can come up with a reasonable estimate of what might be possible. And after you're finished, then you enter whatever amount you think is appropriate into that area. So when you're finished doing that for each of these line items, it might look something like this. And what the worksheet does as you do that is it does a calculation of taking the percent that you enter, multiplying it by the current annual expense, and coming up with the potential annual savings. And then it totals it up underneath that column, so you get a total of the potential annual operating savings that might be possible from this project. Next, we want to offset those with some potential ongoing expense increases associated with your project. The worksheet includes a few examples just to get you thinking about what those might be. For our particular project, they might be something like this. And again, you use the comments and experts and examples and colleagues to help you come up with what those projected expenses might be. And those are totaled up by the workbook. And then they are subtracted from the potential savings so that you end up with net operational savings. So just to scroll up a little bit. This is the potential savings. These are the potential increases. This is the net of the two. You might also want to keep track of which budgets are going to be impacted, which departments are going to be impacted, to make sure that you've engaged them in this estimation process. So you can keep track of that in this area here. And now we get down to the employee expenses. So there are three areas that you might be able to save some money on relative to expenses for employees, HR expenses, that it might be easier to hire employees who are excited about the kinds of projects that the company is undertaking that shows that they care about climate change or energy use. Same thing with attrition. Good employees might want to stay with the company more, and it's not going to cost the company as much as it currently is if good people are leaving. And you're going to get some higher productivity from employees. And the process is the same as it was for the other ones. You take a look at the current annual expenses associated with these things. You take a look at the potential savings that's possible in these areas. And the workbook does the math based on what you enter in the yellow and white cells. So when you're finished this sheet, the results might look something like this. There's quite a lot of guidance in the comments associated with these cells that help you with both the original amounts as well as with the estimated amounts. So feel free to browse those at your leisure, but what the logic is pretty straightforward. You take whatever the annual expense associated with that particular line item is, multiply it by the savings that you hope to be able to realize on that as a result of the project. In this case, it's going to be easier to hire people because they want to work for this kind of company, or they want to stay with this kind of company, which will lower the attrition expenses. And the logic behind all of this is backed up by examples of what other companies have realized, and especially advice and counsel from your HR folks so that they agree with these estimates being possible. The most challenging of all of these calculations is on the higher productivity from employees, which is coming from two basic areas: productivity gains from more time on the job and productivity gains while on the job. Three ways of getting more time on the job and productivity gains while on the job. And there are estimates of how much that productivity might be and the percent of employees that might be affected by that, and that's how the calculations are done here. So what we're assuming is that this extra engagement by employees is going to drive higher productivity by the employees, and that's going to save the company hiring more people to be able to get that same amount of productivity. So the logic behind this is based on the amount that the company is spending on employees, and that's part of the information that you put up here that you get from human resources. And that ends up with a fairly significant number. And this is always going to be a big number because you're dealing with large payroll numbers. And a little bit of a change in your estimates here make a big difference in the bottom line. So try to be conservative. It's important that they be included in the mix, but it's also important that they have the credibility of your HR colleagues behind them, as well as your own thinking as to what might be possible. So by the time you're finished, what you've got is a set of savings that are related to the employees. So the value of the higher productivity from employees, the hiring and attrition savings that you get from the employees, and you also have some net operating expense savings. And all of those are going to be copied automatically, as before, into the overview worksheet, which is keeping track of all of the highlights of what's coming out of these worksheets. So if you click over on the overview worksheet, you'll see that the numbers that we've just been talking about are all included. There's one line item for operating expenses, and there's another one for employee expenses. And the workbook has automatically filled those in, simply copied them from the worksheet that we were working on. So we're about halfway there and ready to do some capital expenditure estimation, which we'll do next.